In a consignment, consignee only receiving goods from consignor, that is, he is having only possession of goods, but he is not having title. Okay, title will still possessed with the consignor only till the goods are sold by consignee. He is the owner of that goods. For that reason only, closing stock of consignment will be recorded in the books of consignor, but not recorded in the books of consignee. Okay, unsold stock will not be recorded in the books of consignee. Why? Because he is not the owner. He is acting as an agent. So for the reason, goods sent by consignor to consignee, it's not amounted to sales. It's only transfer of position from one person to another person. Okay, that's all about May 2019 question paper. So next we are moving to May November 2019. In this, so goods sent on consignment missing, overriding commission, abnormal loss. Three things are there once we see the question paper. Okay. Anand of Bangalore consigned to Raj of Pune. Goods to be sold at invoice price, which is represent 125% of cost. Raj is entitled to commission of 10% on sales at invoice price. Okay. Question clearly says that is ordinary commission will be receiving on invoice price and 25% of any excess realized over invoice price. That means overriding commission is there. That is excess price. So sales minus invoice price. Then he will be getting overriding sales. On that overriding sales, he is charged 25% of overriding commission. Okay. Expenses on freight and insurance incurred by Anand were 12,000. Okay, that is consignor 12,000. This is direct expenses, non-recurring nature. Okay. Next, the account sales received by Anand shows that Raj has affected the sales amounting to 1,20,000 in respect of 75% of the consignment and his selling expenses to be reimbursed were 9,600. Question clearly says that there is a selling expenses. 10% of consignment goods of the value 15,000 were destroyed in fire at Pune go down. Okay, 10% of consignment goods. So 10% of consignment good. He is saying that 10% of consignment good of the value 15,000. That is on total goods sent on consignment. 10% of the value is 15,000, which is destroyed by fire in Pune's go down. Okay, the insurance company paid 12,000 net of salvage value. Raj remedied the balance in favor of Anand. In case of consignee's account, we have to by balance carried down. We should not write. We have to write by bank account for a balance and figure. You are required to prepare consignment account in the account. Sorry, consignment account and account of Raj in the books of Anand. Also necessary calculation. Okay, right? So this is what the question says, right? So first to computation of goods on consignment. Computation of goods and consignment. Why? Because in this question there is no information regarding goods and consignment. Only one clue available, that is 10% of goods destroyed at consignment go down, that is the 15,000. Okay, so 10 percentage 10% of goods sent on consignment equal to 15,000. Then what will be the value for 100% of goods sent on consignment? Okay, 100% of goods sent on consignment. What will be the value? So in this case, you can cross multiply it, then you will be getting value goods sent on consignment will be 1000 divided by 10 it, then you will be getting 1 lakh goods sent on consignment. So that is the invoice price of goods sent on consignment. Okay, so invoice price of goods sent on consignment. We got it. So in this problem, so they are following invoice price method. So the once again the one more point they mentioned is the invoice price how it is made. See, so 125% of cost. Okay, so we need what is the value? So cost 100. The simple step cost 100. Profit will be 25 percentage and invoice price. Invoice price is 125. Okay. So in this case, we need at invoice price profit profit percentage at invoice price means 25 divided equals to 25 divided by 125 multiplied with cost 100, and you will be getting 20 percentage on invoice price. That percentage converted into, that is 20 percentage on invoice price. Invoice price, right? Now percentage also conversion is done. Okay, right? To goods sent on consignment, to goods sent on consignment 1,50,000, and expenses of consignor to bank. How much amount of expenditure incurred by consignor? Expenses on freight and insurance by Anand were 12,000, that is 12,000. And to consignee, what is the expenses incurred by consignee to Raj account in bracket for expenses? So how much amount of expenditure incurred by him? That is expenditure incurred by him on sales related expenses. The question itself mentioned. Uh, Raj has affected the sales to be mm, his selling expenses to be reimbursed were 9,600. Is 9,600 Raj expenses to Raj for commission. What is the commission we have to calculate it? How much amount of commission is eligible? Commission separate calculation need to be done. Why? Because there is a overriding commission also there. So for the reason, we will be working out for this. Working out, right? That will calculate and abnormals, all these things we will do. Then we can go for abnormal calculations part, right? So first in this, so shall we calculate abnormals first? Computation of abnormals, computation of. So first, what I have to do? Already they have given the information. Abnormals, they itself disclosed that 15,000 abnormals invoice price, right? So less less profit. In case in invoice price, if you deduct the profit, then we will get cost. Okay. Invoice price equal to invoice price equals to cost plus profit. So now what we are doing? So in invoice price, we are deducting profit, then we will get cost. What is the percentage we got? 20 percentage. That is at the rate 20 percentage. To deduct this 3,000 plus profit rate 20%. Profit at 20 percentage, that is at amounts to 3,000. 15,000 into 20 percentage, you will get 3,000. Then cost of abnormal loss. Abnormal loss will be 12,000. This is a cost price of goods lost in consign is screwed on, but in the cost price along with that we have to add consignor expenditures. Okay, we have to add proportionate expenditures to the this cost of goods. So for the return, the reason we have to add consignor consignor expenses. So consignor expenses amounts to 12,000 for whole consignment. Here lost is 10% only. Then in that case, 10% of expenditure 1,200. Then value of abnormal loss. Value of abnormal loss will be 13,200. So this is the actual abnormal loss. What is the amount company is getting from insurance company? You have to see that the insurance company received. Insurance company paid 12,000. So in this case, we are receiving by abnormal loss. Abnormal loss. Total loss will be by insurance company. Insurance company. That is insurance company making payment of 12,000. 12,000 only, right? Insurance company paid 12,000. So the balance amount is loss for this. That is 1,200 loss by the loss has to bear by this entity. 1,200. That is 13,200. So in the goods and consumption, there is a loading will be there. For eliminating loading, just we have to reverse that entry to goods and consignment. 1,50,000 into 20 percentage. That is 30,000. 30,000 is the loading on goods and consignment. After that, we have to calculate closing stock. So once see that question, the question says that total 100 percentage of goods, there is a 10 percentage loss and 75 percentage sold, 85 percentage sold. Okay, the balance will be 15 percentage only, right? Okay, once again. So 85, the balance will be 15 percentage of goods with the consent. So this is the abnormal loss. Value of abnormal loss is this 30,200. Next to computation of closing stock. Computation of closing stock. Computation of closing stock. So out of 100 percentage, 70 percentage goods are sold, 10 percentage goods are lost. Total 85. The balance will be 15 percentage. Okay. Invoice price of closing stock. So what you have to do? 1,50,000 in a brackets. 1,50,000 multiplied with the 15 percentage. Okay, will be getting 1,50,000. 1,50,000. 1,50,000. 1,50,000 multiplied with the 15 percentage divided by 100. Then you will get 22,500. That is invoice price of closing stock. Then plus add expenses of consignor. Expenses of consignor. Expense of consignor. We have to add 15 percentage. Total expenses incurred by consignor is 12,000. So same to 12,000 to 15 divided by 100. That is 1,800. So value of consignment equal to this is the value of consignment. Value of stock. Value of stock at invoice price. Value of stock at invoice price. This is very important. Invoice price. Okay. For this, in this there is a loading also there. So we have to eliminate the loading. So for that reason, so once again we have to do at a cost price. Okay. Okay. 15 percentage. Okay. Cost of closing stock. Cost of closing stock. That is calculated by okay, 1,20,000. How it came? So 1,50,000 minus 20% is 1,20,000. 1,20,000. Here we can calculate 1,20,000 multiplied with the 15 percentage. So same here, equal to 1 lakh 3,000 multiplied with the 15%, then it will be 18,000. So cost of closing stock, add expenses of consignor, add expenses. So expenses will be same like 1,800, 1,800. Then it will be cost of closing stock, cost of share closing stock. Cost of closing stock will be 19,800. So this is the value of cost price of closing stock. The difference is stock reserve. Stock reserve. The difference between invoice price of closing stock minus cost price of closing stock. Then you will be getting 4,500 as a loading. Then so we have to record that. Okay. So net load stock reserve. Stock reserve 4,500 and by closing stock 24,300, right? Now these things is eliminated. So commission we have to calculate. Once again we go for calculation of commission. Computation of commission. Computation of commission. Okay. He sold 75 percentage of invoice price. 75% of invoiced goods, right? So in that case, total invoice price of consignment. Okay. Invoice price of consignment. Consignment is 1 lakh 50,000. 1,50,000. Out of this 1,50,000, he sold 75% of goods, right? Once again, see that question. Out of 70% of consignment is sold. So in this case, invoice price of sales, invoice price of sales equals to directly you can apply 75%. That is 75 divided by 100. So this is the invoice price of sales. So on that he is eligible for receiving how much percentage of commission he is eligible for receiving. Raj is entitled to commission of 10% of sales at invoice price clearly mentioned. So commission will be ordinary ordinary commission is calculated on invoice price, that is invoice price of sales 1,12,500 multiplied with the 10 percentage. We calculate that 11,000 sorry 11,250 will come 11,250 plus 10 if you can, you will get that only. Okay, 11,250 is the ordinary commission and delicatory commission which is calculated on the excess overriding sales. Okay, and overriding sales overriding sales equals to actual sales minus invoice price of sales. Actual sales, how much amount you have given in the question? See that he sold for 1,20,000, affected the sales 1,20,000. Okay, actual sales equals to 1,20,000. That is the actual sales minus invoice price of sales. Invoice price of sales is this one. So this is the overriding sales. This overriding commission. Overriding commission, how much percentage he has given that? Hmm, and 25% of any excess price realized over. So 25% is that is 7,500 multiplied is 25 divided by 100. So get that equals to 7,500 divided by 100. That is 1,800. So total commission will be equal to 11,250 plus 1,875. So this is the total value of commission he gained. Right? This is all about, okay, that is the commission earned by him 13,125. So working note one we just now we calculated. Commission is done. Large expenses, commission, everything is done. Everything is done, right? Now we have to total it. We have to total it. So sales, closing stock, abnormals, everything is done. Total will be okay. So we didn't rate the to Raj. That is sales made by him. That is 1 lakh 20 sales for sales in bracket sales. Sales right. We total this, we will be getting 1,87,500. 1,87,500 is total here. So from this side, we are getting 1,89,225. One second. Okay, here we are getting loss here. So what is the amount of debit side is I 1,89,225. 1,89,225 is the total here. Then 1,89,225. Okay, what is the total here? 1,87,500 goes to minus 1,87,500. The loss by profit and loss. Profit and loss. So this will be transferred to profit and loss account loss, right? So this is the consignment account, right? So I hope everything is done. Okay. Whether they asked consignment account also in this question. You are required to prepare consignment account and account of Raj in the books of Anand. Okay. You need to prepare consignment account also, Raj account. So once again, this thing is enough. Okay. Raj account. Raj account. So first, what is the thing? Expenses incurred by consignee. What is the entry? Consignment account added to Raj account by consignment account. Right. By consignment account. So expenses incurred by him, how much amount? So 9,600. 9,600 is the expenses incurred by Raj and commission by consignment account for commission. So 13,125 is the commission and commission and by commission and sales that is in brackets consignment account. What is the amount? 1,20,000. 1,20,000. Any advance given by him? Check that. Any advance? So finally, hmm, advance nothing mentioned in this question. Commission, okay, account sales, so that is okay. Nothing is recovered from it. So finally, buy bank. Guess finally balance amount will be 1,20,000 minus 9,600. Yes, 720. This 97,225 is a balance on that. 120. That's it. Okay. Okay, that's it. So this is the balancing figure. Balancing. So, so this is all about consignee account and consignor account. Sorry, consignee account and consignment account. So very simple. If you are very conceptually clear in the question calculation part, it will be very easy for you to get the marks. Okay.